Welcome back. We continue to track the market action by reaching out to experts around the continent and the world. In fact, Marko Papic is chief strategist at BCA Research, and he joins us from Los Angeles right now. Marko, thanks a lot for joining us. You've got some interesting views on big tech that we'll get to in a second. First of all, what is your take on the remarkable situation that we find ourselves with respect to the U.S. and China, with trade barriers totaling 104% in the U.S. for Chinese goods and 84% in China on U.S. goods? What are the consequences here for the global economy and for markets?
It's very difficult at any point of I think, President Trump's negotiating position to ever linearly extrapolate it. Because if you do, you almost always end up in World War III with everything. So in other words, you have a very bifurcated world and potential outcomes. On the one hand, this could all be negotiations, and we could very quickly have a phone call between President Xi and President Trump to basically step down from the tariffs and engage in negotiations. On the other hand, it could be the beginning of the end. And, not just in terms of U.S.-China relationship, but, China could use this as an opportunity from a domestic political perspective to build consensus and support for a lot more, including geopolitical actions in the near abroad, to try to militarily reunify with its wayward province of Taiwan, as an example. So I think that, investors are in a very challenging environment because those two outcomes are so diametrically different. One, you need to start buying deeply expensive, out-of-the-money puts. And then in the other one, you should actually be sitting on dry powder and potentially buying back into this market within hours, days, if not weeks.
Okay, some market watchers, professional market watchers, believe now is the right time to buy some of the big tech stocks that have been hammered, some of the Mag 7 names, or even big tech stocks outside of the Mag 7. You've got some views on that subject. You don't think the sell-off in their shares is entirely driven, if I understand correctly, by the trade tariff situation.
Well, first of all, I think it is interesting that since January, every time we had negative trade news, it was actually big tech that sold off more than any other really asset. They led on the way down over the past 3 months. And I think we need to pause and ask why. First of all, I agree with Secretary of Treasury Scott Bessent. I do think DeepSeek is a big issue. I think it suggests that the big tech firms don't have insurmountable moats around the productization of the AI technology. So that's I think, really legitimate concern. The second issue is that I think that big tech has been helped by this massive capital flow from the rest of the world to the United States, whether that was the Japanese carry trade, whether that was European high net worth individuals dumping Siemens for Netflix because Russia invaded Ukraine. Whatever the case is, there was a huge inflow into the U.S. and U.S. economy because it was seen as a safe haven, as a bastion of innovation, and also because the economy recovered after GFC really well. The issue is that that entire narrative was built on a fiscal house of cards that is now collapsing as yields approach 4.5% in the middle of a recessionary world. There is an exodus out of the U.S., and I just don't see how big tech somehow avoids it.
And you don't think AI will come to the rescue? You think AI is more of a threat to these companies than a key tool that they're developing for their future growth?
I think that AI could be as transformative as railroads. Railroads gave us the second industrial revolution. My concern is that ultimately railroad companies ended up providing that infrastructure essentially for free, which is why they ended up being terrible investment opportunities. If you're just building the rails on which future innovation is going to be built, then you're not actually innovating yourself. And so that means all this CapEx that the big tech companies are doing is great. It's actually very good for humanity, but it's not necessarily a great business. And that's why I go back to DeepSeek. Whether the Chinese company lied, whether they stole chips, whether they fell from the sky, it doesn't matter. The point is that you can create AI products outside of the moats of big tech companies. And that means that as an investor, I don't necessarily want to own big tech in order to get returns on my AI-focused investments. I also wonder to what extent tech is going to benefit from AI. I mean, I think it could be many other sectors, healthcare, finance, industrials. It could be all sorts of sectors that deploy AI in their companies that increase profit margins, find new markets and so on. It may not necessarily be tech itself.
Marko Papic, thank you very much for your insight. He's chief strategist at BCA Research and joined us from Los Angeles. Well, please